Everybody, happy Monday. Today is March 20th. Hopefully, y'all are having a great Monday and y'all had a good weekend. SPY is currently trading for $390.79. So, not really much change since Friday's close, which was $389.99. And if we go over to the 2-day 5-minute chart, yeah, we're not seeing much change. We have a 391 resistance right now, 386.58 for support, which is way below where we're trading right now. The line for this week starts at about 386 and then ends the week at about 384.50. So definitely be watching for that. And then for other resistance, we have 395.25, 399.03. And then for supports, 381.81 and 380. Our expected range is going to be between 379 and 401. We have the Fed meeting, which is coming on Wednesday at 2 o'clock for the rate decision. And then 2:30 is when Powell is scheduled to speak. I believe, let's see, FOMC countdown, that the markets expect the Fed to pause. Actually, no. It's a 25 basis points, 71% chance of 25 basis points, which I think is probably the right decision for right now. It is, slowing down the pace to 25 basis points, which was 25 basis points last time, but they did put 50 on the table. But now they're pulling back again, doing that 25 basis points. And what'll be interesting to see is going to be their summary of economic projections. That's probably going to be the main focus because right now the markets expect the Fed to cut rates by the end of the year down to 3.75 to 4% from currently 4.5 to 4.75. So they're expecting 75 basis points worth of cuts between now and the end of the year. Starting, I think, in June is when they're started or July is when they're started to cut in July of this year. I don't think that the Fed is going to be able to cut in July. I think that inflation is still much too hot for them to start, but we'll have to see. I think that they're going to either keep their guidance for 5.25 to 5.5% for the federal funds rate by the end of the year, or they're going to even raise that to 5.5 to 5.75. At least that's been the sentiment from all the Fed members before all this banking shenanigans happened over the last couple of weeks. And I don't think that the Fed is going to back off of that just because we're seeing a few regional banks going belly up. Looks like QQQ got kicked off of my watch list somehow. Let's see. Where is it at? Oh, it's actually on the bottom of my watch list. It's down 0.5% today. That's interesting. Down to 303.87, where SPY is actually managed up to 0.3%. That's a bit unusual, to say the least. IWM is also up 1.3%. This is a very mixed market that we're in right now for sure. Let's see. Let's check the big names. So Apple was trading at like 160 the other day. They were only like 10% off their all-time highs. So that's kind of troubling. Actually, less than 10%, I think. Let's see, 180. They're trading at 155 right now. They're still a ways, I guess. 180, 155. They're still about 14% off their all-time highs, but at 160, I can't see Apple as much of a bargain personally. And then Microsoft, another big name, obviously down 1.35%. They were really high and extended on Friday. Tesla trading at down 1.2%. And then the big one that everybody's been watching lately has been Nvidia. Nvidia's down 0.9% today. And that one was getting really close to its all-time highs at over 260. Now it's down to 254. So we're finally seeing some pullback in the tech names after going up for so damn long to such absurd valuations. Good morning, everybody. Good morning, Peter. Good morning, XRP, Kamala. Yes, sir. We got 18 votes. 56% are saying green. 44% are saying red today. And we only have 5 likes and 18 votes. So some of y'all didn't follow the prompt, but that's okay. But if we head on over to Robinhood, I did open a call credit spread for QQQ and a call debit spread for SPY. So these are hedging each other. This one's assuming that QQQ will go below 302, and this one's assuming that SPY will be above 395 today. This one probably not going to work out for us just because SPY is trading at 391. It would have to go up another $4 to put this in the money for max profit, and SPY is only up 0.2% today. It's not out of the realm of possibilities, I would say, but with tech weighing down today, I do think that could possibly hold the rally back to see that 1% gain for SPY today. So I am going to close out of this. They're currently going for 24 to 26 a piece based on the bid ask. I opened 5 of them, and I opened them for 37 each. I will be closing for probably 23, 22, 23, hopefully. Well, if SPY doesn't start sliding before I'm able to get out of this, that could happen. But I put in the order for 23. Let me pull up the premium Discord chat so I can post that right away. All right. Nope. Not filled for 23. All right. Doesn't look like we're going to get there. So I shall replace my order for 21. Jesus Christ. SPY's dropping to 390 now. All right. I don't want to go much lower than 21 personally. Still not getting filled at 21. This is ridiculous. Gotta love Robinhood. Gotta love Robinhood and their bid-ask spread. Any plays for FRC? I would probably take the downside for regional banks. Honestly, I would be long-term bearish on the regional bank ETF KRE just because the government has made it very clear that they don't really care for regional banks. They want to basically centralize the money and power. This is something that I talked about in my last video, if you haven't watched it, that I released Sunday, where Janet Yellen was saying that they're not going to protect the deposits for any bank that they don't deem to be that they don't say would cause like systemic risk. So basically they get to pick and choose which banks, the depositors that they bail out. Just cut losses for the SPY 394, 395 call debit spread that expires today. Today is the 20th, and I got out at 21 each. I originally picked those up at 36. Let's see. 37 actually. Originally opened at 37 each. So it's a 16 loss for 5 of them. Multiply by 5, not divide. 80 loss. All right. But yeah, FRC, the banks, I would generally be bearish on for the smaller banks just because the Fed has made it very clear that they have their special interest in only bailing out the deposits for the large banks, essentially is what they said. If you listen to the Janet Yellen testifying in front of Congress the other day, the Oklahoma representative kind of pinned her with a question asking if the Oklahoma small regional banks end up going belly up. Will they get bailed? Will the depositors for those banks get bailed out? And she basically told him no. So KRE, I would want to take bearish positions against. It is up, 3% today. Trading at 44.40. Last time I traded it, it was a $50, $51 call credit spread. When it was trading, I think this day or the day after, I'm not sure. I ended up taking like $100 profit for that. And it's looking like another decent opportunity that we could take too, depending on how high it might go. Let's see, 46, 47. We could do like a 47 call credit spread. Let's see if we get it expiring for this week. I wonder how much credit we'll get out of it. KRE is the ticker symbol. I wouldn't want to trade any individual though, just because, the volatility around it is going to be way higher than what we get for KRE. Like FRC is down 14% today. So personally, I wouldn't want to trade that kind of crazy volatility, because that trade could go against you very quickly and spook you out of your position. But looking at the 47.48 call credit spread on KRE, currently it's paying 20-cent credit at the bid and then 31-cent at the ask price. So you could probably get $23, $24 of credit on that. It's not a bad deal. I would want a little bit more if it's only $1.50 away from the short strike price. Personally, I would want something along the lines of like at least 27, 28. The ask actually just moved up to 38, so you might be able to snag that at a better price. Let me check on Aries. Aries always has the better bid ask. Watch the video on Sunday. Am I going to do a Nike bearish trade? So the Sunday video, I gave an outline for all the different scenarios that can play out. So you have to figure out which one is the most likely of the scenarios. Usually it's the top right that's the most likely that I've noticed so far since I've started doing this little graph. But Nike, they're expected to do 51-cent earnings per share and 11.45 in revenue. So if they end up missing earnings per share, beating on revenue, they would be above 112. Right now, Nike is currently trading for 121. So that's like $10 below where it's trading right now. And Friday, this ended up closing at 120. So your credit is going to be lower since it's $2 higher. If you're assuming that it's going to stay above 112 and you do a put credit spread, let's see. I doubt you're going to get much money at all for that. Nike. Let's see what day they're posting to. That's important. Wednesday. No, they're posting Tuesday, tomorrow, March 21st. And if you're assuming that it's going to stay above 112 with a put credit spread, you're getting paid $12 credit. Oh, $12 to $31 credit. That bid ask is just terrible. All right, let's check on here. Setting my expiration date for the 24th this Friday. Since it's an early week earnings, I usually set my expiration date for the same Friday. We would sell the 112, buy the 111, place the order, and it's going for 23 and 26. So you're getting about a 3-to-1 risk reward ratio. With earnings trades, I usually try to get at least a 2-to-1 risk reward ratio or better. Ideally, you want like a 1-to-1 or even better than 1-to-1. Just because there's about a 50-50 chance that the trade goes for or against you because earnings is a binary event. So this trade I don't think I'd be willing to take for right now. If we do get a dip, say between now and tomorrow, this might be a better opportunity possibly. If it's paying like 30-cent credit or more, then I'd be willing to take it. But at 24, I just don't think it's worth it. If we assume that they're going to beat on their earnings, though, miss on the revenue, we would assume that it would be above 115. Let me cancel this order and replace it for 115. Currently, it's already up 1% today, so that's already putting the odds against you and giving you less credit. But if you assume that it's going to be above 115 with the put credit spread, you'll get paid. Huh. Really? Oh, that's because we have all of those. I thought I had canceled the order. Okay. All right. Let me get rid of the 112, 111. Now place the order. So this is paying you 30 cents. And Nike is trading at 121 right now. You're assuming it's going to be above a 115. So it's a $6 difference over $120 stock. So it's about a 5% drop. That's actually a decent trade to take on, I would say. But I would want to watch the rest of the market, see if Nike pulls back with the rest of the market by the end of the day. Right now, SPY is trading at 391, so it's not really changed much. And if you get a pullback for, say, QQQ, then you might get a drop for SPY, which could end up in a drop for Nike by the end of the day. So you could get them at an even better price than the 30 cents that you're getting right now. So I think I would rather wait on it, and I would be bullish for it. Uber shares. Should I sell my Uber shares for the Fed meeting? Average price at 31.15. Let's see. Uber currently trading at 31.90, so you're at a small profit. Not bad. Let's see. I would want to sell it closer to like 32, 33, but that, I don't know if we'll be able to get there by the Fed meeting on the 22nd, this Wednesday. Right now it's showing me signs of bearishness just based on the RSI below 50 and the MACD. Both of the lines are going negative. So if you're just basing this on technical analysis, this definitely looks bearish, and you only have a couple of days to the Fed meeting. So, I mean, if you're at a small profit, I would take some profit maybe, and then keep the rest, like sell half of the shares and then keep the other half. You don't have to be all in or all out of a position. That's something that I try to do whenever I have shares of stock, at least. Whenever it comes to options, I'm all in or I'm all out, though. All right, so the QQQ trade, that one's starting to work for us. Going for 54 cents. I originally sold them at 35 cents, so I'm still at a loss here of 120. But looks like UVixie is catching. Well, where is UVixie? There we go. UVixie is up a little bit today, and I haven't bought my $100 worth of it yet. Trading at $6.50 at the moment. Lowest point this morning was down to 630, so you're not going to get it too much cheaper unless SPY ends up rallying for the rest of the day. So I am going to buy my $100 worth now. And then we have one more day until the next Fed meeting, or until the Fed meeting, which will be the last time that I buy $100 worth of UVXY. My assumption, though, is the reason why I'm buying volatility right now is that the Fed is going to come in much more hawkish than what the markets anticipate. They're going to go higher by the end of the year for the federal funds rate versus the markets expect them to cut by 75 basis points. Just bought 100 of UVXY. So that means that now I have 440. Well, let's refresh the page, huh? Yeah, 444 shares at an average cost of $707. And we'll keep monitoring SPY and QQQ. Right now, SPY seems to be going up. Currently at 392. QQQ is still down 0.7. It's really surprising to see QQQ down 0.7 where SPY is up half. It's very unusual. But let's check some other indicators. So let's check gold is up 0.2% to 184 today. So with the dollar coming down to 103.30, this is a new low for the month on the dollar, I believe. Yeah. Last low was at 103.45. Now it's at 103.31. So the dollar is falling with all of this liquidity and banking issues that we're seeing in the market. So that's going to end up in gold going up. You're going to see Bitcoin going up, and basically any commodity. Usually oil would go up with that, but the fear is that we're going to go into a recession, and when we go into a recession, less oil is generally consumed. There's less energy consumed, which means that the price of oil goes down with the demand. So that's why you're seeing oil falling from 80 a barrel down to 66 a barrel. That's a really steep drop ever since this banking crisis kind of started a couple weeks ago. So everybody's now predicting a recession. We're getting the hard landing narrative. So that's why you're seeing oil coming down, but you will see gold start to outperform in a recession. We talked about 2007 to 2011, that time frame, and how gold ended up doing really well compared to SPY trading flat. So if you want to position, if you want to hedge for recession, that would be the trade to take. If a barrel of oil is dropping in price, why is gas going up? Gas has been, at least where I'm living, has been coming down a little bit, like 5-10 cents. Not really, major changes by any say. But the reason why you might not see the price of gas reflecting the price of oil is because of refining. So you have the price of oil, but then you also have to refine that oil in order to make it into gas. And the problem that we've had over the last couple of years, since this administration took office, has been that they've decreased our refining power by shutting down a lot of refining plants. They just didn't have the incentive to continue their operations. So since we did that, now we don't have as much refining power to refine all the oil into gas, which has ended up in gas prices going up, essentially. So if we get more refineries here in the U.S. To refine the oil into gas, then the price of gas would come down with the price of oil. But we're not really seeing that. Thank you, XRP. Bitcoin ought to be doing still pretty well. Currently trading at 27,800. I ended up buying this at 21, and then I have some more crypto over in my Coinbase account. Let's see. I've got Ethereum, and let's see if I can log in, hopefully. I've got a two-factor authenticate. 840 4533. You would think that they would use a two-factor authentication app instead of your phone number. It's a lot safer, but we don't recognize this device. Okay. I just gave you my phone number. Okay, whatever. Anyway, so for Coinbase, I have, I think, 2 Ethereum. Or like 1.8 Ethereum. So close to 2 Ethereum. And then I have some Doge to go with that. Doge has not really been seeing much love out of this Bitcoin rally as I would have expected. Still trading at 7.3 cents, and I bought it at like 8 cents. And we really haven't seen much of a rally for Doge compared to what we've seen for Bitcoin. If you look at the price of Doge for the last month, it's up. It's actually down 16%, whereas Bitcoin, let's see, is up by 12%. So it's really strange that Doge hasn't caught any love, but that's fine. Let's see. The 10-year is going up a lot today, up 2%. Interesting with the dollar going down. Usually rates and the dollar trade hand in hand, but the 10-year is actually going up today at 3.5 almost, 3.47. So it's off the lows at 3.4 again. So it's just trading in that range that it's been in really ever since December of last year, and before that starting in September. So we're not really moving much for the 10-year. Let's check on the 2-year. 2-year yield is currently 4.15. No, 3.91 actually. Up 0.077 basis points. Now I want to check the 210 spread. See how that's doing. So this is the recession indicator, or the difference between the 2-year and the 10-year yield, and it's actually currently at 0.44, which is the highest that we've seen this year actually. So whenever this starts to go up, that is usually when the recession begins. If you see this going above 0 after being inverted below 0, that's when you usually have the recession kick in. There's some lag to it. I think the lag is like a few months or something like that, if I remember right. So I think the recession is going to come in 6 to 18 months. That's, just my best guess. So we're in March right now. So I would expect it between October of this year and October of next year. It's really hard to say the exact timing for it, but that would be my guess for a recession. Always buy underlying shares. Let's see. IWM is still up 1.5% today. That's wild. And QQQ is down 0.9. Usually those two trade like hand in hand with one another. But IWM was trading at the range lows at 170. So I guess I just ended up catching a bounce off of that. And QQQ was just overextended. So maybe it's just all technical trading today and selling off what was overextended and buying what was oversold, I guess. And SPY is up 0.5% today, so not really changed much. I wonder what the VVIX is doing today. The volatility of the VIX still up at 120. So you're still seeing a lot of movement for the VIX. And I think that you're going to see a whole lot more movement for the VIX after the Fed meeting on the 22nd. My assumption for the VIX for the Fed meeting is that this could go to like the mid 30s. So like 35 or so from 25 right now. So that's like a $10 jump or about 40% higher than where it's trading at the moment. It already hit 30 before, and I think that it could easily go above 30 again, depending on if the Fed keeps its hawkish stance at the end of the year and expects rates to go higher to 5.25 to 5.5%, or even higher at 5.5 to 5.75%, which I think would probably be necessary given that inflation is still sticking around and the Fed is reactive, not proactive. That's part of the issue with the Fed, is that they're not going to stop raising interest rates in anticipation of a recession or some sort of, big event in the banking. They're going to do it after something goes wrong. That's always been the case. So I think that they're going to have to go higher with the rates, which the markets don't believe, which I think will create a very volatile Wednesday. And then Thursday would probably be even more volatile just because you have a full day of trading, whereas on Wednesday you only have 2 hours of trading after the Fed decision. All right. Tesla is managing back up to 0.8%. Let's see, the QQQ call credit spread. Oh, QQQ is making its way back up now. Suddenly. It was down to 302.79. Now it's at 303.60. So $1 change. And this is down 150. I think I'm just going to hold it in tomorrow. All right, let me recheck Nike. I think Nike actually went up a bit more, so the trade that I wanted, probably not the best. And then Chewy, the other stock that I was interested in trading for earnings on Wednesday, is down 2% today. So if we go to my Notion page, so if they beat earnings, beat revenue, the stock would go above 37. So it's trading at 37 right now. If they beat earnings but miss revenue, probably the most likely scenario, they're going to stay above 35. Miss earnings, beat revenue, they would be above 34. And then last one, miss revenue, miss earnings, below 33. I think Best trade is going to be over 35. Let's see. So for Chewy, CHWY, they're reporting on Wednesday. So I'll set the expiration date for Friday. Sell the 35, buy the $34 strike price. It's paying 20 cents at the bid, 32 at the ask. So this is another Nike situation where they're just not paying enough to make the risk reward worth it. Let's see if we do 37. You get paid. That one's not too bad. That one we would assume that they would beat earnings and revenue. I don't think that they're going to beat revenue just because it is a pretty sudden jump from the last few quarters. They ended up stalling on their revenue for the last few quarters, so I don't know if they'll see that re-acceleration in their revenue. So I think most likely scenario is beat earnings, miss revenue. Maybe we could do 36. Meet somewhere in the middle. Okay. That one's a little bit better. All right. All right, so it's paying 32. So that's better. Currently trading at 38, so it would have to come down 2 or 38. It would have to come down about 5% for that trade. So that's okay. I would be willing to take that. Well, I guess it's 31 cents. Let's see. Probably put up like 200 in risk. Yeah, so 3 of these for 31 cents, $90 profit, $93 profit for 207 loss. So about a 2-to-1 risk reward. I post it on the Discord. Swing trade. Just opened a new 35, 36 Chewy. Dang it. Put credit spread. Expiring this Friday, which is the 24th at 31 each. Okay. The bid just moved up to 34, so I got cheated for that trade, but that's okay. Do I see Nvidia pulling back all the way to 240? What's a good risk reward ratio? It depends on what you're trading. So for Chewy, I just chose a 2-to-1 risk reward ratio, assuming that it's not going to fall another $2. So it would have to fall about 5% from where it's at right now. But with earnings being a binary event, this could sell off easily 10% depending on how earnings ends up coming in. So I basically outline what their earnings is expected to be, what the revenue is expected to be, and give price targets based on that. So I think that the most likely outcome, based on looking at their past earnings, which the past results isn't a good indication of the future, but that's all we have to go on, if they end up beating on their earnings, missing on the revenue, I think it could stay above 35, right? So the chances are in my favor if they end up beating earnings, missing revenue. But if they end up missing earnings and missing revenue, then that trade would go against me. But I only risked about $200, whereas I trade with roughly up to like $10,000 in options. My total portfolio is 30K. So I'm not really risking too much per trade, just based on the total account size. Like I'm risking less than 1%, right? So as long as you're taking on very little risk, you can just take on a shit ton of losses, and it really doesn't matter. My win rate personally is anywhere between like 50 and 70% given the month. If we check on my drive for the last few months, I think for March it's been 55%. For February it was 70%. For January it was 52%. But for March, for me, the wins have been a bit larger. I've been using a lot of debit spreads, cheap debit spreads, which makes the wins more consistently larger, whereas the losses have been pretty minimal just because the risk-reward ratio has been so well. So for my debit spreads, I'm usually taking on a 1 to 2 risk-reward ratio. I'm usually buying them between 30 and 35 cents. And then I'll usually take profit on them anywhere between like 50 and 60 cents a piece. So it's usually like a roughly 100% profit. Let's see. Like you can just look through the log for the debit spreads. Some I'll buy for more expensive, like the Bank of America Leaps. But if we search by debit spreads, if we sort these, you'll see that these usually have about a 1 to 2 risk reward. All right, so you're seeing 74% profit, 16% loss, 81% profit, 93% profit. So it really depends on like the trade structure. So debit spreads, it's usually a 1 to 2 risk reward, and then credit spreads, it's usually 2 to 1. And then 27 and 31% loss. But yeah, Nvidia pulling back to 240, that would be a pretty steep drop. I do think that reasonably, yes, it should come back to like 250, 240. But this market doesn't have much rhyme or reason behind it. So it's really hard to say that it would pull back all the way to 240. Maybe if you give it enough time, like I would say 2 months, 3 months until expiration, then yeah, easily 240. But if you're talking about, say, the next couple of weeks with the Fed meeting, it could really go either way. You could see going above 260 again right after the Fed meeting, depending on what happens with the Fed. All right, let's see that. Put credit spreads probably down for Chewy that I just opened. Yeah, down. Oh, it's only down $3, interesting enough. So I guess I didn't get axed too much by the bid-ask spread. Just watching QQQ mostly this morning with that call credit spread that I've got open. Let me make sure to add that Chewy trade in. Chewy put credit spread. That's a bullish neutral sentiment expiring for 324. I bought the 35. I sold the 36. 3 of them for 31 credit. All right, and it looks like I'm missing some trades on here too. Let's log those in. This one I ended up closing today at a loss. At 21. All right, and I think that's all the trades for today. So that's all I got for y'all today, and I will catch y'all at 9:30 tomorrow, day before the Fed. So get ready for it. I think I'll just hold my position for NVIDIA. Yeah, probably a good idea to just keep on holding. Yeah, no problem, and I'll catch y'all tomorrow. See you, everybody.